Hello everyone. In this section we'll be covering the structure and components of the stock market, and in particular indices and ETFs. So what an indice is a collection of stocks and securities that are grouped together in a collective. So basically what they're used for is to monitor the overall market conditions as a whole. So starting with the S&P 500, it's the collection of the largest 500 companies in the United States. And you can look at the S&P 500 by typing in the SPX ticker, or you can use SPY, which is actually technically an ETF, but it is the mini futures, and it's a little bit easier to navigate for technical analysis since it's not as high as number as SPX. Next we have NASDAQ, which is mostly tech heavy, so if you ever want to look at the technology sector as a whole, NQ is definitely a very good thing to look at. We have QQQ, which is the same thing as here, is the mini futures ETF. There's also the Dow Jones, which is your 50 consumer discretionary industrials. I would like to refer it as mostly your industrials, and it's the 50 companies in the US. And then we have DGI and DIA. We also have the Russell 3000, which is a collection of the largest 3,000 companies in the US. So watching all of these in tandem will show you how the market is moving and where the money is rotating to. So if you have money in mostly NASDAQ and you see the S&P 500 is sideways, you would know to move your money into something in the technology sector. There's also the volatility indices, which they just showcase the overall volatility in the market. So you can type those looking at VIX and VXX, also known as VIX. Moving on to ETFs, we have exchange traded funds, and they are a collection of securities that are sold as a single entity for investment. So if you ever want to look at certain sectors, you can use these ETFs to look at those. So for example, we have energy, which is XLE, and oil, USO. And looking at these as well can see a little bit better. You can see the actual sector where the money is moving as opposed to looking at the overall indice. And then also there's mutual funds, which are just when a company pulls together money from investors to invest in securities.